morning, everyone, and welcome to India Blockchain Week. You know, when we look at UAE and Europe, we see regulations. But when we look at India, all we see is, creative interpretations. We don't have a clear framework. And to help us decode where we actually stand, we have our esteemed speakers here navigating us to what regulations currently we have in India and how do we navigate further. So moving on to our questions here. What is the key structural principle India should borrow from international frameworks to manage risk here? And is licensing tiers or asset classification the right way to move ahead? Who would like to take the first attempt?
Happy to start. Hi everyone, good morning. Sorry for the delay, first of all. So essentially, I think the global consensus is arriving at licensing, right? And India is one step behind that because we have an AML regime and a tax regime. Globally, the consensus that has emerged is we have a dedicated authority that licenses any entity that holds user funds in trust, right? Whether it is crypto or the fiat which is used to purchase the crypto. So for instance, any activity involving on-ramp, off-ramp, custody, or crypto-to-crypto trading, if user funds are held in trust, there is a consumer protection interest to license that entity. A parallel we can give in our today's regulatory landscape in India is for payment systems and banks, right? Because they hold user funds in trust, they're licensed by the RBI, and they are required to follow certain norms, right? The promoters have to follow the fit and proper criteria. There has to be a minimum net worth, etc. So globally, the principle that's emerging is same activity, same risk, same regulation. So if there is a risk of consumer funds being compromised in any way, then there is a regulatory interest in licensing that entity. So I think the next step for India is obviously to follow that approach, which is now reasonably well established. MICA in the EU has set the tone for that, and looking forward to see how India also takes a step on that. I'll hand it over to Dilip and Suril.
Thank you so much, Jaideep. Would you like to add some more thoughts to what Jaideep mentioned?
Yeah, like before I start, I needed one extra chair for one special guest that I've brought. If it's possible, like a table. Oops.
I'm wearing orange watch out.
So yeah, now we have, a special guest with us. He's watching us, he's here. And I believe, regulation, no regulation, it doesn't matter. Crypto is here. Crypto is, it's the journey for me my journey in decentralization began in the year 2000. And since then, I have been involved with the whole decentralized space. And what I realize is that there is a lot of, it's the system is losing and they're trying to regulate crypto, but they don't understand crypto and they don't accept crypto. And the problem is that all these regulations are coming from the old world. They're coming from a brick and mortar world, while crypto is designed for a digital world. And I believe it's the developers, the coders, they are replacing the bankers in the system, and the bankers don't like it. So they're going to try all kinds of methods to curtail and, in the beginning, Bitcoin was all about dark web, and that's the only story that the media threw out. And they criticize every time I mean, Bitcoin has been going to zero since 2009. And every time they say Bitcoin is dead, it just spikes up. So, and there's an entire state machinery which operates against this system. And this, I mean, they have the power of the media, and the media, like when NFTs were a rage, they were just shilling NFTs like crazy. And because they thought that that would be their into Bitcoins. But Bitcoin is a social revolution, and it's a peaceful revolution. So if Mahatma Gandhi and Martin Luther King were alive, they would be buying Bitcoins, you know? I mean, anyone who loves peace and harmony would be involved in Bitcoins. And yeah, and I've been my code name with the CIA is Satoshi's advocate. So that, you know, I'll stop here and let Dilip take over.
No, I think Vidisha, you asked a very interesting question. You know, and while there is the mica, like Jaideep mentioned, and there's Vara and the other things, but if you look at Japan, Taiwan, Switzerland, South Korea, they have a self-regulatory issue.
Yeah.
And within India, the RBI has realized and said that there are certain sectors that they're difficult for them to regulate, so they have promoted self-regulatory organizations. Whether it is in fintech, whether it is in NBFC, you know, right? Recently there's announced payment, right? So they have their framework. Why not in this space, right? And, you know, they could just say, okay, these are our 4 or 5 concerns. You got to address them. We are worried about dollarization. We are worried about, you know, outflow of money, etc. If they just do that, it's very simple. It can be done overnight, right? But I think for that to happen, all of us in industry have to be responsible. So today in industry, there are good players, not so good players, and bad players. And the good players and not so good players are losing out in terms of regulation, in terms of acceptability, because of the bad players. And not bad players are not necessarily the hackers. You know, that's a common thing across all different things. So if we, as an industry, behave responsibly, right, then there's a very easy chance of us getting recognized and appreciated. And you know, the challenge here is that there can't be a centralized regulation for a decentralized industry. It's an oxymoron.
Right.
You know?
Understood.
So that's my 2 bits.
No, and I'd like to make a point that, you know, if you look at the whole evolution of Bitcoin, Bitcoin started after the collapse of the 2008 financial crisis. And it was the regulators who were corrupt. It was corrupt regulators from the central banks who, you know, who gave bailouts to the banks, and ordinary people were left on the street. Their houses were foreclosed, and Satoshi was really upset about it, and that's why he put the white paper in open source. He said, anyone, it's free for everyone, and I feel that that spirit of Satoshi has to stay alive, and you know, all the people who are in the industry should respect Satoshi as a, you know, it's like I've personally faced so many challenges. You know, at Nishith Desai, we fought the case against RBI, and in that the Supreme Court came out with a very definitive judgment, and Jaideep had worked really hard on it, and we got a 180-page judgment which clearly said that Bitcoins cannot be banned. And yet the government does all kinds of wishy-washy things and tries to curtail its growth. You know, India is a land of opportunity for this digital asset world. You know, like if Switzerland is home for storing your fiat, India can be the place to store your digital assets. And if we get our regulations out of the picture, then India can be the hub for crypto innovation. I mean, most of the people I've met in the crypto industry come from India and have some Indian relationship. And unfortunately, they are all being threatened by enforcement directorate, they're being threatened by arrest, they're being threatened by, all kinds of things. I'm right now working with Jet King, and we've been going to the court, and every time we go, they're asking for an adjournment, tariq pe tariq. And it's upsetting, it's frustrating, and they're frustrating entrepreneurs, they're frustrating the youth, and this is not very good. And we can really make an impact in the world. And India has the largest number of crypto wallets. So
Yeah.
what are we waiting for? Why are we so scared? We
Right,
have to wake
Suril.
up.
Yeah, right. Very great point made there. But Dilip, I want to ask you a follow-up question to what you just mentioned. You talked about being self-regulatory organization. BWA has been representing the Web3 industry to the government authorities for a long time now. And we, with BWA, the members have also created frameworks like consumer protection guidelines and cybersecurity, fair trading practices. Uh, how do you think a self-regulatory body without a statutory backing can actually protect consumer interest? Do you really think that a statutory backing will expedite or have a better implementation framework in place, or industry can itself, without any statutory backing, also function as an SRO?
So there are two questions in that, right? So first of all, it's not necessarily to have a statutory backing, right? Like I said, when I did the first time, I said if the industry is responsible, and if everybody is responsibly following the consumer protection code, the consumer protection code came up after a hack, right? So we developed that, and then we also developed the cybersecurity. We got the fair trading guidelines. We have the token listing guidelines, which is modeled on. So if the regulator sees that industry is following that, right, then they can, just bless. They don't have to do that, because one of the challenges that some of the governments face is, this is a gray space, right? And if something were to happen, would the government be responsible, right?
Yeah.
So, Dubai, Switzerland, South Korea, etc., different frameworks. In India, it's slightly different because there are many different things. But if you take the Taiwan model, the Taiwan thing is very simple. If you have to register with the FIU, you have to be a member of the association, right? And if you're a
That's a
member of
good
the
approach.
association,
Yeah.
you have to follow the codes. If you don't follow the codes, the association is a process to do that, and you just inform the regulator or whoever there is. So there are very simple solutions. We need not complicate the matter. But I think, like Suril also mentioned, there's intent to do. If there's an intent to do, and the sooner we do it, better, because we are losing out on talent, we're losing out on companies, we are losing out on leadership position,
Yeah.
and it's a big challenge.
Got it. Yeah, that makes sense. I would like to move on to a very recent High Court judgment that came in for the industry. The Madras High Court recently classified crypto as property and ruled that exchanges held these assets in trust for the users. A question to you, Jaideep. What is the immediate non-negotiable fiduciary judicial proceedings exchanges regarding asset classification and client protection, and how the industry used this crucial legal classification of crypto as a property to advocate and shape for the coming legislation or the regulation in India?
Sure. So in our view, crypto has always been property, particularly since VDAs were introduced under the Income Tax Act from 22. There is a certain section not often noticed under the Income Tax Act which makes virtual digital assets a subset of property. Besides that, the global developments by foreign courts have generally said that VDAs or crypto amount to property. So the observation by the Madras High Court was useful. Uh, it, 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 the court could have also decided that issue in that case regarding the WazirX hack without making that particular observation, but it adds a sense of credibility and further legal clarity, I would say, to the classification of crypto, because essentially, even from first principles, I had written an article in 2019-2020 on whether the government can ban crypto, and I had argued that it would be unconstitutional for the government to do so. One of the grounds being that crypto is a property that users hold, and a ban would deprive users of their right to property, because courts have always recognized that property is both tangible and intangible. Now the Madras High Court has cemented that position, and the immediate consequence for an entity like an exchange or a wallet provider is you are akin to, let's say, a bank providing a bank locker service. Right? So if the goods are in the bank locker, the bank has that fiduciary duty to take security measures to keep the goods in the bank locker safe. Right? As opposed to, let's say, you having a demand deposit on a bank where it is a debt owed by the bank, and in the case of an insolvency, you can suffer a haircut. Right? Now with this recognition, perhaps the chance of that is less likely. So it increases the need for greater security measures for custodians.
So in Jet King's case, for example, Jet King is the first Indian company to buy bitcoins on its treasury, and we advised them, and we classified bitcoins as intangible asset, and it's you know, so it's like your intellectual property. You know, what I say is that I've gone one step even beyond crypto, because I'm classifying code as currency now. Because if you look at your wallets, you look at your crypto wallets, you look at your bank balances, it's all just code. So now the real value is in the code. It's not in whether it's a Bitcoin or whether it's a, you know, it's someone telling you that you have money in your bank and you believe it. And that money in your bank is so heavily loaded with debt. I mean, there's money being borrowed in your name and you're not getting any advantage of it. So the system is completely broken. And and inflation is just going out of the roof. I mean, the rupee is the worst performing currency in all of Asia right now. And this is going to create a big mess for us. You know, it's going to create social unrest. And if we don't get a good, positive result for crypto and blockchain and Bitcoin, we are going to face a crisis like Nepal. So we have to take it very seriously. We don't, I mean, the government has completely, miserably failed at understanding crypto. And in fact, I remember in the earlier days, they said in one of the draft regulations, they said that if you are found with a Bitcoin, you could be imprisoned for 10 years. What kind of logic is this? And we have to question the government. We have to question authority. And we have to think for ourselves. And we have to challenge it, you know. We have to fight the battle. And we have to take the regulators head on.
Yeah.
We can't be subservient to their policies because they are trying to secure their own positions. You know, because crypto and blockchain is disrupting the bureaucracy. It's disrupting the socio-economic status quo of the society. And this change is not going to stop. You know, the crypto winds are blowing in our direction, but we are just putting up barriers for no reason. So, and stable coins are a joke, complete joke. It's like putting, it's like, you know, it's like, you know, when you are learning to cycle, you have side wheels. But when you have side wheels, you're not going to win a race with side wheels. You have to get rid of them. So there has to be no, you know, what I have advocated is to create something like the IRDA, the Insurance and Research and Development Authority, to create something called CRDA, which is Crypto Regulatory and Research and Development Agency. Mark my words, I'm calling it an agency. I'm not calling it authority, because authority, power corrupts, and power is out of control. It corrupts completely. So we need to stand up and create our own system, and we need to create a system where where information flows freely. Data is your asset, and others are monopolizing on it. And when you are trying to monopolize on their asset, which is the fiat, they are calling you criminals.
Right. Thank you, Suril, for your inputs here. I would like to address a point on investor fund safety here. We see in traditional stock markets, there's a concept of having customer protection fund or consumer protection fund. Since our industry is not currently regulated, can creating a private fund to safeguard customers, fund interest, a right approach? And if yes, how can we actually do that in absence of any regulation currently?
Sure. You want to? So I'll just share some brief thoughts. I think one of the areas that the industry currently needs is insurance, right? So insurance cover can really save or guard against some of the pitfalls of events like hacks, right? Now there are hacks even in the traditional banking and regulated system, right? But typically they're protected by insurance. If insurance is also extended to the crypto sector, and I think that will only happen realistically once a regulatory regime or robust self-regulatory regime comes in, then that itself will protect consumers, because an event like perhaps the WazirX incident could have, the losses could have been mitigated had there been available insurance. Now, there was no available insurance cover because insurers are reluctant to insure this sector as of today. So I think that is the long-term goal that we should work towards. In the meantime, I think there's no harm in having private initiatives to establish these funds. I think one or two of the large players have done it on their own initiative. And obviously, the more sizable such a fund becomes, the better users are protected. But it may not be very sustainable in the long term for these funds to sort of make good the loss in a sustainable way.
In terms of regulation, in terms of what could be done now, like Jaideep mentioned, there's nothing prohibiting the IRDA to actually create an insurance product for virtual disasters tomorrow.
Yes.
And fortunately, the current chairperson comes from DA and is in charge of this sector, so he knows the sector well. The second thing what we need to do is allow banks to lend to the sector. The third is that the Ministry of Corporate Affairs should be able to register a coin company or a crypto company, which currently they don't allow.
Yeah.
The next interesting thing what can be done is that you allow setup of losses and reduce the TDS. If you do these four things, right, okay, and you have actually solved the immediate problem of most of the founders, right? Then of course, you can use your own bank account to buy and trade in crypto through an exchange, right? Where on-ramping and off-ramping. That's it. People won't leave. Majority of the people won't leave. Those companies that need to raise finance and need to be in a different jurisdiction because their financing company wants them to do so, that's a separate issue. But here, our survey says that 32% of companies have left India and relocated to Dubai or Singapore or Dublin, right? So that's the challenge. But there are very simple things can be done overnight. 1st February, you can do three things. Maybe in next month, you can do another few things. They're not very important. They're not things that have to be passed by an act. You don't need an act. Suril used about the agency. So this can be done by just one simple letter from a particular organization to the other and it is done. It's not a very complicated issue.
I think if you're going to ask permission from the government to build, then you're going to find resistance. That's a given, right? So you keep building and building. You know, forget about the regulation. Don't think about it. Have no fear. Just, there is no limit to this. You know, it's technology, and you can't control technology. It spreads. It's Bitcoin is like electricity, you know, and when electricity first came, no one could regulate it, and then they built systems around it, and it's like we are in the age of Internet of Value. So to transfer value should be as easy as sending an email. Why can't, I mean, if you can send 100-page documents, we as lawyers draft all these documents,
Yeah.
and we send them on email, we get digital signatures, then why do we need the bank? We have a record already, so why do we need the fiat? We don't need fiat.
That's a great point. Since we are short on time, I'll quickly open the floor for questions from the audience. Okay, sir.
Actually, industry like crypto, which is a gray area.
Can't hear you.
Hello, I'm audible now? Yeah. So, I work as a compliance officer in a crypto hedge fund.
Can you come a bit closer?
Just use the mic closer to you.
Okay.
Yeah.
Now it's okay?
Yeah.
So, I work with a crypto hedge fund as a compliance officer. Yesterday only, I just had a meeting with the Indian portfolio management company. And they were refraining from, entering into crypto market or maybe investing in our fund as well, because they don't want crypto on their books. So, as they quoted that crypto is a gray area. So what?
Crypto is not a gray area. It's completely legal to own a Bitcoin and cryptocurrency in India.
On an institutional level, it's still little unclear. So what power does legal opinions hold in these cases? Does institutions who are regulated by SEBI can get legal opinions to at least enter into the space and maybe try out themselves as well? So in that way, SEBI also has good feedback of institutions who are in the market working, and yeah. So I want your thoughts on that.
So there is the law and there is the practice, right? In practice, SEBI has been very reluctant to allow its regulated entities to have any exposure to crypto. So there was in fact a crypto-focused mutual fund which went through the approvals and was about to launch, but pulled back the launch, and it's speculated that it was because of reservations on the part of SEBI. Also various other approvals that are required from SEBI or the stock exchanges for any initiatives of either a listed entity or a SEBI regulated entity have generally not been forthcoming from SEBI, because there is a reservation that until a larger policy decision is taken, they don't want their regulated entities to get exposure to the space. So there are instances of, as Suril said, JetKing having crypto on its treasury. There are friction points even in those, right? So as soon as it's a listed entity or a SEBI regulated entity, and there is a need for that permission by SEBI or oversight by SEBI, it's going to be a challenge, right? Because today's SEBI regulations regulate very tightly what those regulated entities can do. Right? For instance, an alternative investment fund will not be able to hold crypto as treasury because the regulations say exactly what you can hold, and crypto is not part of the list. So again, this is sort of awaiting the wider policy consensus. Till then, it's likely to be a challenge.
So just a statistic, 21 million Bitcoins will be there. 2.1 million are held by 100 companies worldwide as their treasury. Now, India, one is actually having a challenge. But there are companies like Time. Time magazine also has, Bitcoin in their treasury. So I think, again, it's an issue which we need to decide. You can say, okay, you need to have one-to-one backup, or you need to have something like that. But we need to clear the air and very quickly. These don't require any acts or go through parliament, etc. This can be done by SEBI.
Yeah, I mean, an interesting fact is in the US, the ETFs which launched, they're among the highest performing ETFs across asset classes of those particular fund houses, which are the largest global fund houses. But their crypto ETFs have outperformed their other fund offerings. So hopefully that'll be a cue.
We would like to give opportunity to others.
Mr. Chenoy, this question is for you. This question is for you, Mr. Chenoy. Given your background from FICCI, have you experienced any other industry, to go through such kind of acceptance issues and hurdle rates at the policy level, at the practice level, or are you seeing this first time in your career?
Thanks for that question. The IT industry had the same problem. Banks could not lend to Infosys. In fact, the first bank that lent to Infosys, the bank chairman went under a CBI inquiry and all of that. At some point of time, Indian companies and Microsoft had the same market cap and the same turnover. Indian banks did not lend to IT companies. We had a problem. The computers that RBI was to use were kept outside the building. They weren't allowed to enter. And we became a service economy. Similar in this space, if we don't change now, we will be developing products and getting service revenue while the revenue and all will be made by somebody else in the world.
Yeah. Thank you.
If there are any further questions, we'll take it offline. Since we are out of time, we'll have to conclude the session. And this brings us to the end of the session. We may not have a crypto regulations with us, but the insights shared by our panelists have actually helped us make things clearer going ahead. A huge round of applause for all our panelists here.
And thank you, Vidisha.
Thank you so much.
Thank you. Thank you so much.